Hello, everyone. Well, after the markets closed last night, everyone was wondering, was that huge drop in prices the beginning of a downturn? Today, we got the answer. It looks like it may have been a one-day wonder. The chairman of the Federal Reserve called it a correction. His reassuring words today touched off a bit of a rally. The Dow got back 52 points, about an eighth of what it lost yesterday. The Nasdaq picked up 8 points today. It's back in positive territory for the year. Anthony Mason is down at the New York Stock Exchange. Anthony, a lot of people were holding their breath, and now I guess they can exhale.
Yeah, Katie, after all that overnight anxiety, there was a deep sigh of relief here on Wall Street when the Dow staged that 50-point comeback. Hardly a blistering rebound, but it stopped the bleeding, at least for now. And what a difference a day makes.
Right after the opening bell rang, stocks began their rally and stayed strong all day.
The market tone is good, but you can see most of my orders are sell orders.
Right. Ted Weisberg has worked the trading floor for 38 years.
Is there a mood change on this floor today?
Oh, absolutely. A lot calmer.
The biggest bounce came when Fed Chairman Ben Bernanke appeared before Congress this morning.
Federal Reserve, in collaboration with the President's Working Group, has been closely monitoring the markets
and sent a reassuring message to the markets.
There is really no material change in our expectations for the U.S. economy.
I think economic growth is not sliding away. It's not a snowball that is careening down some hill headed for a recession or crash landing, and I think the markets were glad to hear the chairman say that.
The trading floor at the exchange may have been calmer, but there were some new economic numbers that gave investors new reasons to be concerned.
New home sales plummeted more than 16% in January, the biggest monthly drop in 13 years. And the government said the economy actually grew at a much slower pace than first reported in the fourth quarter of last year, sharply revising GDP down from 3.5% to 2.2%. But Wall Street shrugged off the news.
So is this over then?
Well, I think it's too soon to tell. Quite frankly, I would have rather seen a little more selling this morning and maybe flush the system out pretty good. But up is always better than down. We just need a little time.
Bottom line, the market may not be out of the woods yet. Corrections, when they happen, usually take weeks or months, not days or hours. Katie?
And Anthony, we talked about those technical problems on the trading floor yesterday. Were they fixed?
Well, some of them were, but in fact today this was again the busiest trading day the market's ever had, and the close had to be extended because trades again got backed up. But there is no evidence that actually that affected stock prices. Katie?
All right, Anthony Mason. Anthony, thank you.